On today's show, Bitcoin leaps above 100,000 in a critical milestone. Where does it go next? Meme stocks rally after Roaring Kitty makes a comeback. And could today's jobless claims numbers signal something more sinister in tomorrow's non-farms report? We've got a lot to talk about. Let's roll the tape. Welcome everybody to the daily recap show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks floated lower here on Thursday as investors are waiting for the crucial jobs report we will get tomorrow, and Bitcoin posting new all-time highs, hitting the key 100,000 milestone. And the S&P 500 had a very mixed day, very similar to what we've had for most of this week. And while we did see some of the mega caps falter, powering some of their gains this week, we did see outperformance in other sectors. Now, Google and Meta were both down, hampering the communication services sector, but we did see telecoms and entertainment, the more defensive part of communication services, do really well. We saw Amazon and Tesla gain 1.3 and 3.72% respectively, but the entire discretionary space was very strong. Semis, software, not that great. Nvidia was flat, but pretty red everywhere else. Uber was down 10%. We're going to talk about why later on in the video. Synopsys was down 12%, and infrastructure as a whole was down, and that's because of SentinelOne's earnings yesterday. The stock was down like 10 to 12% after its earnings. Not a good look, and that capital just got reallocated to Microsoft today, which was up 1.42%. Apple was flat, financials outperformed, healthcare was in the red, and defensives really green here today. Now today was very weird because we did actually see a rotation happen. Look at utilities, right? That's a defensive sector. Look at telecom services. This is actually a defensive sector similar to staples and consumer defensives. Very green here today. So there is a bit of angst. This could be fund manager positioning happening under the hood for maybe 2025. Maybe fund managers are, getting a bit defensive ahead of everything we've seen this year, the Trump trade, tariffs, and we really did see some defensive names, and we've seen that for this last week. Staples, XLP, has been a silent runner in the last week. It's up handily here today. Same with utilities, both are defensive sectors. We also did see cyclicals rally. Financials was green today. Same with discretionary. And look at real estate, up 0.3%, which is considered a defensive sector to some degree, but a lot of the movement there also had to do with what we saw in the yields market. Losers today, the XLE was down, the XLK, technology, communication services, healthcare, materials, and industrials. Industrials actually down 1.11%, and that saw the S&P 500 fall 0.19% today. So a very bifurcated day, some winners, some losers. Such goes the market, and that reverberated throughout the entire segment of the market. Large growth core fell, but large value rallied, including mid-cap value. They were the only real winners here today, and that includes names like financials, staples, utilities. You'll find them in the value components of the market. And then everywhere else was really red. The market wanted nothing to do with small caps, especially small cap growth, small cap core, nothing to do with growth or core in any of these size segments. Nonetheless, market breadth still looks very robust across the board. The 5-day moving average continues to deteriorate, and yes, we do see deterioration in these averages for sure. However, still very robust, well above the 50% mark, and there's not really much to be concerned about right now. We do know that risk appetite is certainly there in the market. We know this because Bitcoin hit 100,000 before the open. Yes, it did pull back quite significantly, but we hit the 100,000 mark. We rallied to as high as I think 104. So this was a critical milestone. And if we actually look at what comes next for markets, and if we actually look at what comes next for Bitcoin, betting markets and prediction markets see Bitcoin ending the year at 128,000. From where Bitcoin is right now, which is pretty much at the 99,000 mark, they see another 28% in upside for Bitcoin through the month of December. So should this be an opportunity for you to buy the dip? Potentially, because if betting markets are anything to go by, there is still some serious gains left in Bitcoin, and very likely those gains will outperform any class of equities, large, small, or medium size. Further adding to the risk appetite sentiment, we saw meme stocks rally. GameStop and AMC were up 10% and 8% respectively, and that's because Roaring Kitty came out and just posted this. He posted a computer in the form of like Time magazine. I hope he doesn't get sued for this. And then there's like a clock right here. I don't know what this means. Probably that like it's time, something's coming. And this really did set these meme stocks on fire. So this guy really does move the market. However, it wasn't all good news. Uber was actually down in excess of 10% today. Lyft as well, and their shares came under pressure after Waymo, an upstart self-driving ride-sharing company owned by Google, announced plans to expand in Miami. Waymo said it expects to have its rides available to all customers in Miami by 2026. So down 10%. I've really been doing a lot of due diligence into Uber, looking at it. My fair value for this stock is around about $80. So this does look like good value. The problem here is I don't know how to assess the self-driving concerns. I don't know how to discount that, as well as the regulatory concerns. These are things I just need to do more homework on before I actually make an investment or pass on it. Nonetheless, I don't hold any Uber yet. I am bullish. This is possibly an opportunity for us to get long. Nonetheless, there are some serious risks to this name. However, Waymo's news did not affect Tesla. Tesla shares rallied more than 3% today on the back of some bullish commentary from Bank of America. Their lead analyst, John Murphy, actually visited the Houston Gigafactory, and he said the trip gave us increased confidence that Tesla is well positioned to grow into 2025 with its core EV business and launch of its robo-taxi offering, and longer term from its investments in Optimism, Murphy wrote to a note in investors. So the stock was up 3%. Both like what they see, and this actually might be a conservative price target looking into 2025. Maybe $400 is on watch. I did have a $350 price target after the election for Tesla. It's absolutely smashed that, and I do think based on the momentum we're seeing, Tesla does go higher into 2025. Now let's switch gears and talk about economic data. Jobless claims was released. We got initial jobless claims today, and we actually did miss 224,000. The forecast was 215,000, so a slight miss, nothing major. We also saw a miss in the ADP numbers, and all of this is telling us that we could actually see slightly softer than expected non-farm numbers in tomorrow's labor report. Now, 224,000 is not much to go by because we have seen initial jobless claims in the last few weeks come down significantly, tightening the labor market. So this is just a little bit of softening in what is already a pretty tight labor market, if you ask me. We also did see the trade deficit compress. This was because of falling imports. Now, this could be an anomaly. I think in the next couple of weeks and months, we should actually see this tick up as businesses store up inventory ahead of tariffs. And then looking globally, guys, like we saw in the US markets today, we saw a mixed day. Asia was very mixed, but India was green. Australia was just green. New Zealand was red. Europe were very, very green, but they were red for most of this week. And then we saw Canada very positive. The US not so much, and then South America green as well. So a mixed day globally and a mixed day in equities, but let's hop on the charts. So we did have a mixed day in the equity markets. When we look at everything under the hood, we saw a very mixed day, but looking at the indices and what they returned, it looks pretty ugly. The S&P 500 down 0.19%, the NASDAQ 100 down 0.31%, the IWM really taking it on the chin. After hours price action not looking that great. The RSP fell, mid caps fell, profitable small caps fell. Just an ugly day in smalls and mids for the most part. The S&P 500 only down 0.19% though. So all we're really seeing is just a little bit of a give back, maybe some profit taking at the highs for the rally we've seen in the last couple of weeks, guys. And the thing is, with higher beta, that comes more volatility, and that's why the IWM was down 1.17%, but it's been up the most in the last month. Looking at the dollar markets, we saw yields a mixed day too. The 30-year yield fell, the 2-year yield gained, the 10-year yield was pretty much flat. The dollar was down 0.6 0.60%. Bonds as a result gains, and then commodities. Gold was down, silver was up, crude was pretty much flat today, and then Bitcoin here at the 99,000 mark up 0.63%. And if we actually look at a chart of Bitcoin, things look very, very bullish for this metal. We can see we had a high year of like 103, 104,000. So, that is the high. That's a new all-time high. Very bullish momentum here in Bitcoin. Look at it year to date. This is a typical accumulation and breakout pattern. You can see we rallied, then we had a couple of months of accumulation, or a number of months, 4 or 5 months, and now we have this breakout right here. We probably are going to accumulate at this 100,000 mark before making the next move up. So we probably accumulate, so we maybe just accumulate more Bitcoin here. So the market probably going to trend sideways for the next couple of weeks, and then we're either going to break to the upside or downside, depending on how people want to be positioned into 2025. I think you want to be bullish Bitcoin. I think Bitcoin probably goes high into 2025. Do we see 128,000 before the end of the year? What prediction markets are saying, that's a bit of a stretch if you ask me. The truth of the matter is Bitcoin has momentum, and I wouldn't really bet against it. Looking at the S&P 500 though, guys, let's just zoom into the gamma charts. And what we saw today, right, was not ugly price action. I mean, this candle isn't like overtly bad or anything. We did close at the lows of the day, but we didn't break yesterday's lows, and we haven't actually closed that gap where we did gap up from yesterday. So all in all, very constructive price action in the S&P 500. This probably does lean itself to higher prices. While we didn't see massive buying, especially here with this wick at the lows of the day, when you look at something like the IWM, the RSP, and mid caps, the S&P 500 held up really, really well, mostly on the back of the mega caps. And so we probably do trend sideways right before moving high. And this is what I said yesterday, market cap indices probably won't do well, and we might see outperformance in the RSP. That didn't pan out, but I still believe that's going to happen. I think we should see outperformance in some of the smaller names, the RSP, maybe getting to there. Now, what does this leave us for the rest of the week? We probably are just going to trade sideways, guys, here before making the next move up. Sideways with the bullish tilt, by the way. That's what I'm thinking here. I mean, today, this wasn't overtly bad. Looking at the NASDAQ 100, very much the same. We never got the lows of the day. It's not a bearish candle. We never closed that gap. So all in all, I mean, this is just a profit taking. It's just like some people taking some of the profits over the last 4 days after this rally. That's how markets work. Now, with regards to where we stand with the gamma charts, the NASDAQ 100 still has some move to run to the upside. We are in positive gamma. So any dip we do get, guys, you do want to take advantage of that, because equities are poised to go higher, especially in positive gamma. You just want to buy dips, sell rips. And if we do consolidate sideways here, take it as an opportunity to get long. Remember, December seasonally, we do get that first half of December as quite choppy, and then we rally. And while the first few days of December has been bullish, we can actually see a little bit of consolidation here before making the next move. Now, either way, you should already be positioned. You don't really want to enter longs right here, guys. Any longs you do enter right now, you want to look beyond December into 2025. In the year and now, you should already be positioned from most of the rest of the year. And we're really just trying to get the last bit of gains out here in 2024 before we look at material downside into 2025. I think we're going to see a serious pullback at the start of the year to kick off 2025, and then we'll go from there. Very much similar in the S&P 500. You can see we have a little bit of room to run to the core resistance. We're in positive gamma, which is above the gamma flip zone. So any dip we do get, buy those dips. But this price action we've seen today, especially here in the mega cap, especially in large caps, nothing to be concerned about. I just think this is constructive market moving price action. It's what you actually want to see. You want to see a bit of profit taking, because that means capital can be reallocated at a later date at lower levels to take the index much higher. Looking at the RTY though, we are in positive gamma and we are very close to the gamma flip zone. And this is why I say stuff like the RTY right now, small caps, the RSP probably do hold more value, more upside, because there's definitely more room to run to these upside targets. And listen, even if we do consolidate here for the RTY, this would literally be a higher low relative to this, above the gamma flipping positive gamma, looking very, very constructive. Now, there is a risk here that we do just slide below and get into negative gamma. However, we did see strong buying on this wick yesterday. We didn't see buying here today, but the bulls couldn't take us below positive gamma. And so things look very, very constructive, all things speaking. I do still think that the RSP and RTY should outperform into the rest of the week, maybe early next week, where we do see a little bit of consolidation here in the gains we've seen in the S&P 500 and the Nasdaq 100. That's what I think is going to happen over the next couple of weeks. And maybe we do see a risk on sentiment because we are seeing stuff like Bitcoin rally and some of these meme stocks. Nonetheless, guys, we are in a momentum-based market. Look at the Nasdaq 100. Look at the RTY. These are year-to-date returns. Look at the S&P 500. Very linear returns. Bottom left, top right. You don't want to fight the trend. The trend is up. And if you guys want to know what to buy in 2025, go ahead, check out yesterday's video. I posted themes that I like. I do like mid caps, the equal weight, and a bunch of other ETF stocks, geography. So go ahead, check out yesterday's video if you want to know how you want to be positioned for 2025. And diving into sentiment, this is the AA sentiment survey, and things are bullish right now after the huge downtick we've seen in the last couple of weeks, especially in November, which is weird because November was actually a very good month for stocks. We saw an uptick here in bullish sentiment votes, taking us very close to the 50 level, and a downtick in bearish sentiment. Really goes to show the market we're in right now. Sentiment can turn on a dime, and those that are in the neutral camp continue to be far and few between, with many people either in risk assets reaping the benefits or really just waiting it out for a better entry. You can't deny the fact that we are in a bull market, because even if you look at the last 4 weeks, the lowest sentiment reading here at 37.1 was just below the average bearish sentiment vote, and even this number right here was above the historical average in bullish sentiment votes. So all in all, we're in a bull market, and even when bullish sentiment was ticking down, it wasn't as to say that we were in an overtly bearish scenario, just that we were kind of normalizing from these levels right here. But now we're back to that bullish sentiment, that euphoria we see in the market. To be honest, that's probably going to go on for the rest of this year. The month of December, looking at seasonality, tends to be very bullish. You can see that the month of December normally actually bottoms out here very early in the month, as well as around the middle, the 15th, 16th, and 18th of December. And then we put a bottom in, a higher low, and we actually normally rip to the upside. Average returns in December, 1.55% and 82% hit rate. Very, very strong. You love to see that. And normally when you have bullish seasonality and bullish sentiment, it probably has to do with the fact that the fundamental picture is probably really good. And the truth of the matter is earnings growth is set to grow extremely well. This is the 2025 pro forma EPS estimates for large caps, mid caps, small caps, and you can see that small caps are taking the plate handily. Second quarter, third quarter, and fourth quarter earning estimates are all set to be above 50% here for small caps. That's pretty much the Russell 2000. We can also see that mid caps are set to beat large caps, looking at high to mid-teens growth, but large caps also looking at very robust growth as well for 2025. So, and right here, the place where we want to be into 2025, 2026 is probably more the mid cap, small cap parts of the market, and some long exposure to large caps where we can find decent value. But where does this earnings picture leave us with valuation? Right now in the S&P 500, we're sitting at 22.8 times, 20.3 excluding big tech. So the US market, even the broad market, looking really expensive relative to its history right here. This blue box is its interquartile range. In other words, that is the average for the S&P 500 in the last 20 years. Excluding big tech, we see very, very similar situation. And pretty much we are trading well above the historical averages, meaning that the market is technically expensive. And when you look at the rest of the world, Japan, Europe, emerging markets, United Kingdom, you can see that a lot of these are actually within their fair value ranges. So if you are looking for value, you do want to look outside of the US. And generally speaking, when rates pull back, the rest of the world actually tends to outperform. Look at Q3. When rates fall, the S&P 500 returned 5.5%, the rest of the world returned 7.7%, but the S&P 500 tends to outperform when rates rise. That's because of the higher quality components of these businesses. You can see in Q4 when rates have risen, the S&P 500 returned 4.7% versus the rest of the world, which was negative 4.9%. In a flat regime where rates are stable, the S&P 500 also tends to outperform, and when rates rise, like in Q4, more, the S&P 500 tends to outperform. And that really has to do with just the balance sheets of these companies and just how high quality they are. Look at interest expense as a percentage of total debt, which is really an aggregate of quality. You can see the S&P 500, when rates rose here in 2022-23, interest expense as a percentage of total debt barely increased for S&P 500 companies, whereas Russell 2000 companies, which is pretty much a proxy for, the international market, rose in a significant way. And it really goes to show why the S&P 500 tends to outperform when rates rise. People flood quality. They want robust companies with great balance sheets that are somewhat self-funded, and you normally find that in the S&P 500 US stocks versus international stocks or the Russell 2000. So, and diving into the macro, this is the Fed's GDP Now fourth quarter tracking estimate and looking robust at 3.2%. You love to see it when growth is looking that good. We'll see what that looks like at the end of the week, but as it is right now, growth above 3%, real growth above 3%, absolutely incredible. The US economy is so strong right now, and we see that in the US Economic Surprise Index, a rising US Economic Surprise Index above the zero line. The zero line is approximately right here, guys. Signals that economic data is consistently beating consensus expectations. This is a bullish sign because it shows that the economy is performing better than analysts predicted, boosting confidence in growth prospects. When surprises skew positive, businesses and consumers typically gain optimism, driving increased spending and investment for stocks, real estate, and risk assets. This is great news. It often leads to higher earnings projections and attracts more investors, pushing markets upward. A positive surprise index reflects resilience and momentum, setting the stage for continued economic expansion and equity market gains across the board. And we also got this yesterday, the ADP employment report. Guys, we got 146,000 gain in US private employment payrolls. The consensus expectation was for about 150, so we did miss ever so slightly, but a slight miss. And while we have a continued cooling labor market, it still continues to remain secularly tight. And this actually bodes really well for the NFP print that we are to get here on Friday. Now, with the ADP coming pretty much in line, we could probably assume that's what we're going to get with the non-farm payrolls report tomorrow. The expectation here is for 183,000. That is the baseline. That is what we should expect. The unemployment rate to stay at 4.1%. Average hourly earnings month over month to come in at 0.3%. And then average weekly hours at 34.3. Private payrolls at 160,000. And then the University Michigan consumer sentiment to come in at 72.9. That probably should beat based on all of the consumer sentiment measures we have looked at on this channel. So all in all, guys, everything's going to come down to the non-farm payrolls tomorrow. This is the last NFP before the FOMC on the 18th. So it's very, very important. This data point is really going to determine what the Fed does and their outlook into 2025. And looking at earnings for the rest of the week, on Thursday, guys, we have Dollar General, TD Bank, Canadian Solar, and BMO. That's before the open. After the close, we have Lululemon, UiPath, Ulta Beauty, and DocuSign, as well as HP. But guys, if you've made it up until here, thank you so much for watching. If you like the video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.